Welcome to the physical meeting for the media after a long time. Thank you very much for taking out time and to be with us. In July 23, of course, IMF revised the global forecast to 3% from 2.8%. This actually indicates improving prospects across both advanced and emerging economies. Immediate concern about the financial stability seems to be subsiding owing to the resolution of the US debt ceiling standoff and strong action by the authorities to contain the turbulence in the US and Swiss banking. However, the recent downgrade of the US by Fitch over various concerns of the country's finance and debt burden could trigger the bouts of financial volatility with the risk of reactions from the market. Against this backdrop, I would say that Indian economy continues to exhibit stronger than expected growth momentum, with robust domestic investment providing the necessary support amidst weaker external sector dynamics. Looking ahead, real GDP growth is expected to be in the range of 6.5%, aided by the government's thrust on infrastructure spending, traction in domestic demand, revival in corporate investment, and healthy bank credit. Headwinds from prolonged geopolitical tensions and slowing external demand are the key risks to the outlook. On the banking front, credit growth has continued to grow in double digit and became broad-based across sectors. During Q1 of this financial year, all scheduled commercial banks' credit has grown by 16.2% and aggregate deposit has grown by around 12 to 13%. As demand for credit continues, we expect credit and deposit may grow up by 14 to 15% in financial year 24. In the backdrop of this economic environment, I would like to place before all of you the highlights of the bank's performance in Q1 of financial year 24. I am pleased to announce that for once again we have recorded the highest ever profit, and also this is something which is a matter of pride for us. It may not be out of place to mention that very often there is a tendency on the part of the analyst community to really evaluate the performance in terms of quarter on quarter. We have to be very mindful of the fact that the Q1 is always a unique quarter because of the two reasons. Invariably in the last quarter we have sufficient earnings. Various one-offs are there which are getting recorded, whereas in the first quarter those benefits are not available. Secondly, when it comes to asset quality as well, when we reckon the stress or NPA or SMA, they are at a point of time. Whereas the fact of the matter is that at a point of time there could be a deterioration, but overall the recovery keeps on happening every day. For instance, in the current instance also, when we look at our SMA 1 and SMA 2, which is actually stress is somewhere around 7,000 odd crores. But if we look at it at the end of the month of July, we have already recovered 1,500 crores out of that. So I think to that extent, it is very material that we should actually evaluate YoY performance in the first quarter as compared to the first quarter of the previous financial year. So in that context, we have posted the highest ever quarterly profit of 16,884 crores. Net profit for this Q1 has increased by 178% YoY, with operating profit at 25,297. It has increased by 98.37% on a YoY basis. ROA of the bank for Q1 has improved by 74 basis points and it is at 1.22%. ROE has improved to 24.42%. Most other core profitability metrics have also improved sequentially as well as on a YoY basis. Net interest income for Q1 increased by 24.71% on the back of improvement in yields and continuing credit offtake. Domestic NIM stands at 3.47%, and it becomes all the more relevant in the context of our bank because our international book is just about 5 lakh crore, 5 trillion, and our total asset size is about 33 trillion. And also, when it comes to international book, we are very, very mindful in terms of the evolving global economy and the kind of stresses and strains which are evident in the global economy. So that's the very reason why our domestic book has grown almost at about 15% plus, whereas the international book has grown little lower, and that is a very, very conscious effort on our part. When it comes to operating expenses, they have increased by 23.68%. We have actually started building provision for the wage revision, and we have started building provision from the month of November onwards of the previous financial year, and that is the reason why it looks little on the higher side. But if you really look at it, the cost to income ratio, we are just about 50%. On the business front, the credit growth has been robust across all the segments. Domestic advances, as I was indicating, it has grown by 15%, comprising it's a very broad-based growth which we have witnessed. Retail advances have grown at 16% plus, and corporate segment grew almost at about 12% plus. SME and agri segment have posted handsome growth of 18% plus and 14% plus, almost 15%. Domestic deposits grew almost about 12%, driven by the growth in the current account and the term deposit. This is a general phenomena which we normally witness. When the inflation is on the high side, normally the money moves from the savings bank account to the term deposit, and the same behavior we have seen. And the current account growth is essentially attributed to the fact that we have started focusing on the non-government current accounts, and happy to share with all of you that even in the month of March as well as in the month of June and even in the month of July, we have been growing at a decent pace. It is much higher than any of the competitor also. So which very clearly means that going forward it will have an impact on the composition of CASA in the days to come. With regard to asset quality, our gross NPA ratio has come down by 115 basis points YoY, and it stands at 2.76% and continues to be at its lowest level in more than 10 years. Our net NPA ratio has also declined by 29 basis points and stands at 0.71%. Slippage ratio has improved by 44 basis points YoY and it stands at 0.94%. Consistently improving asset quality is also reflected in our credit cost, which stands at 32 basis points and has improved by 29 basis points YoY basis. We have a well-provided stress book. PCR is showing an improvement by 23 basis points. It is at 74.82%. It actually went up by 127 basis points on a YoY basis and stands at, if at all we include OCA, it stands at 91.41%. On the restructuring front, our total exposure under COVID Resolution Plan 1 and 2 now stands at 22,000 crores, 22,666 crores, as at the end of Q1 of financial year 24. The restructuring book has actually behaved very well. Even if we reckon the SMA 1 and SMA 2 in the restructuring book, it stands at only at 11%, whereas if you recall, we have already kept a provision of 30% for this book, and going forward we are hoping that it will even behave even better. SMA 1 and SMA 2 does not necessarily become the NPA. This is nothing but a reflection of some kind of a stress on the cash flow for this kind of a book, but we have invariably seen that a significant portion of SMA 1 and SMA 2 gets recovered and it becomes a performing. The broad trend which I indicated, that out of 7,200 odd crores, 1,500 crore we have already recovered within a month of the account turning the stress account. So that's the kind of a situation. When it comes to the capital adequacy, the bank remains very well capitalized and we have sufficient headroom to take care of the normal business growth requirement. We have worked out that based upon the current capital adequacy, we are very well placed to support the further loan book growth to the extent of 7 trillion. Digital continues to be an important customer acquisition engine for the bank across the asset as well as the liability product. During the quarter, we have sourced 63% of savings bank account and 35% of retail asset accounts digitally through YONO. We have recently launched YONO for every Indian, in which customers of other bank can now access experience of seamless UPI journey on YONO. Our subsidiaries have consistently performed well and continue to create significant value for all the stakeholders and most importantly for the customers of the bank. Most of our subsidiaries are leaders in their respective segment, and we will continue to nurture these subsidiaries and see them creating value for their own shareholders as well as the shareholders of SBI. Before I conclude, I thank you all for your continuous support to the bank. We consider it as a privilege to be able to contribute towards the growth of our economy. We remain committed to rewarding your trust in us with superior sustainable return over the long term. I wish everyone the very best. The floor is now open for all your questions. Thank you.
Louder. Seamless flow of the session. We will move from left to right, allowing everyone an equal chance to ask a question. You may raise your hand and ask a question using your name and the media house you are representing. We request you to please follow the format and restrict yourself to 2 questions focused on the bank's business. If time permits, we may request the subject for additional questions. Now, section. Yes.
Can somebody use the mic, please? I mean, you people can use the mic.
Left to right, you said, na? Lalit?
His left.
That's right.
His left.
Who's left?
His left.
You mentioned.
Daniel, please go ahead. I think you have seen, perhaps it has been a trend in the banking industry. All other banks have also witnessed, and as far as we are concerned, the drop in CASA for us is much lower as compared to what the competition has seen. Not as of now. Sorry? It is 3.47% domestic NIM. I hope so. Because if you look at yield on advances and our cost of deposit, I think it should be stabilizing around this level. Sorry? I'm unable to hear you, please. Recoveries, we have affected recovery of about 1,200 odd crores, whereas last year around the same quarter, this was 500 crores more. And the reason behind is at that point of time we had some reasonably higher value of recoveries. Now the stock left out is not all that big in number, and that is the reason why what recoveries are being affected. It may not really look as high as we have seen in the previous years because the chunky numbers are not there now. Sorry? Credit card book. No, credit card is a separate entity. It is not in the main bank. But as far as the credit card is concerned, even there also they have made adequate provisions to take care of any potential delinquencies. So I think there is not much of a challenge there in terms of so long as the book is well protected, it takes care of the requirements of that industry. See, when it comes to asset quality, I would like to mention a couple of things. One is the underwriting, which I think we have strengthened our underwriting mechanism quite well. Second comes when it comes to retail, the very important component for retail is underwriting is very important. It should be essentially loan management system, which should be underwriting, which means that hardly any discussion on the ground, so that people should not deviate from the underwriting principles. The second component, which is very important for the retail in particular, is essentially in terms of the control and follow-up. And we have very robust control and follow-up mechanism, and that is the reason why I could immediately relate with you and say that out of 7,200 odd crores worth of slippages, we could pull back about 1,500 crore. So that is nothing but the effective machinery on ground to make the recoveries. So I think we are seeing very good results. So I would say that on these two counts we don't have any challenge. Now when it comes to when you look at slippages, in our case the slippages are not as much coming from the running accounts, and even for that matter, even stock of our stress portfolio has also come down significantly. Corporate does not have anything, SME does not have anything, retail does not have anything. Only slippage has come from SME and agri, and there also we could pull back a significant portion. So I think it's a function of the economy on ground, and I would say that the cash flow disruptions lead to some kind of a disruption in the repayment timing. But more or less, I would say that there is, in terms of quality, it's a much better quality, and in terms of the portfolio.
First thing, sir, I would like to ask about the credit growth guidance which you have given about 14 to 15%. You've already grown 13%. What gives you confidence?
Actually, 14 to 15%, I would say that though it is looking at 13.90, but for all purposes, it is actually 15% plus. Reason behind is that our international book, we will be very selective. We may not grow as we will be growing in the domestic market, for the simple reason that the international markets are very, very choppy, and we will be really growing in those markets if at all we can take care of the quality of the risk. Yeah,
So
please.
any sector specific, if you can give idea where you are seeing the growth, and also the distribution between corporate and retail.
I think more or less now, as the situation stands, we are somewhere around 60% as far as retail is concerned. So we will be evaluating the opportunities. If at all there are opportunities for growth in corporate, we'll be more than happy to support it. We don't have a constraint in terms of the funds. We have got enough funds available. Even today also we have got excess SLR to the extent of about 4 trillion. So if at all opportunities are there and it meets our risk appetite, we'll be more than happy to support.
So one question regarding NIMs, that has been one of the points which has been raised by the analysts, although you have mentioned that one should not look on quarter on quarter. But what has been the reason behind the decline?
See, reason is, if at all, I would last quarter of the previous year, we had about 850 odd crore worth of interest coming on the income tax refund. So these one-offs are the one which are normally seen in the last quarters. So in fact, in this quarter we don't have any one-off. So I think if at all you are looking at the core business model of the bank, then there is no challenge, and we are at 3.47% as I mentioned on a YoY basis.
अनुराग from Media. सर मेरा सवाल जिस तरह से अल्टरनेट चैनल में आपने बताया कि 63% ऑफ एसबीआई अकाउंट जो है वो लोगों के थ्रू आ रहा है, लेकिन अब दोनों को शुरू हुए करीब 6 साल से ज़्यादा का वक्त हो गया, और आपके ओवरऑल अकाउंट बेस से देखिए तो उसकी जो ग्रोथ है वो बाकी बैंक जो अभी 2 साल में जितनी ग्रोथ की उसकी आधी है, तो क्या इसके कॉशियस के अलावा
आप इसको जो है किस तरह से कहेंगे आधी है, ये बताइए।
नंबर ऑफ सब्सक्राइबर्स के बेस?
देखिए, ऐसा है कि हमारे सब्सक्राइबर 6.5 करोड़ हैं।
हाँ,
10 करोड़ हमारे इंटरनेट बैंकिंग के कस्टमर हैं, रिटेल इंटरनेट बैंकिंग के कस्टमर। तो हम सिर्फ योनो ही नहीं ऑफर कर रहे हैं, हम उनको मल्टीपल चैनल्स ऑफर कर रहे हैं। अगर आप उसको इस तरह से नहीं देखेंगे, और जो टोटल कस्टमर बेस होगा तकरीबन अबाउट 45 करोड़ के करीब है, उसमें से जनधन अकाउंट आप निकाल दीजिए, वो तकरीबन 12-13 करोड़ के करीब वो है। तो उसमें से अगर आप देखेंगे कि आप अगर जो है 35 करोड़ की जो है रिमेनिंग पॉपुलेशन में से अगर 16-17 करोड़ आपने कर दिया, आप जब अगर बेस छोटा होगा उसके ऊपर कुछ भी चीज़ बड़ी दिखाई देगी। देखिए, तो मार्केट डायनामिक्स है, ये समय समय पर जो मार्केट की रिक्वायरमेंट्स रहती हैं, हम अकॉर्डिंगली जो हमारे को कमर्शियली भी सूट करता हो और जो हमारे कस्टमर का इंटरेस्ट को भी जो है टेक केयर करता हो, उस तरह से हम लोग अपनी स्ट्रैटेजी बनाते रहते हैं। Sorry, I'm unable to hear you. Huh. No, last year we had, first quarter of the previous year, we had an MTM loss, which is not there this time. Other component.
I think that is the major one.
That's the major one. That's the major one, which has made a difference. Recoveries. See, when it comes to, as I mentioned, that we don't have any high value or the chunky assets which are left out for resolution. They are all very small assets which are there, but our effort is to now really recover that also. So, in terms of recovery, Biswas, can you?
Sir, we have a target of net NPA of 0.5%. 0.5%. Sir, not able to hear you.
Net NPA 0.5%.
Sir, if I understood the question, answer right to you, the net profit has really gone up substantially, 178%. Is it due to one of other income?
No, it is not because of, but also because of the lower NPAs also, lower provisioning, and also increase in the loan book and also yield on advances.
You have a sizable home loan portfolio. Recently, we have seen SDFC Bank and SBI Q1FY24, and SDFC Bank is now providing them with rupees on home loan. If you can, how is the competition going?
These are the realities of life. We have to face that competition, and we will see that we should stay ahead of the competition.
Shine from it. So, what is the corporate lending pipeline like?
It is about 3.5 trillion is already there.
So that is for working capital and terms to go together.
Yeah, it would be both.
And so which areas are you seeing this 12.4% growth coming from the corporate growth that you?
See, we have seen growth coming from partly from manufacturing, partly from road and construction, partly from airport, and also some bit of a growth which has come in from renewable energy is another very important focus area where there we have seen significant growth coming in.
So when you said that you have recovered 1,500 crore of that SME 1 and 2, are there any specific pockets of stress that you have seen?
See, majorly I would say that the recovery has happened in SME and also into SME and also retail, pure play retail, personal segment. And other than that, even we have recovered in agri. In fact, it is uniform. But the point is that stress is not there in corporate, large corporate and mid corporate. There is no stress.
Ritu from CNBC.
So while we appreciate this, you said not all SME 1 and 2 will become NPAs. The book has sort of doubled quarter on quarter. So if you could give us a sense of where this additional stress is from, and even in your slippages, besides agri and SME, are there any areas of concern? And if you could provide a number, for the full year, what is the kind of slippage are you expecting, or the credit cost that you're seeing?
I think our effort would be to keep the credit cost less than 0.50 for the fiscal. And when it comes to visibility of stress, see again that visibility of stress is a function of the real economy. If at all real economy is doing well, we hardly get to see any stress. If at all people are getting their salaries in time, we don't see any stress in the retail book also. Because if you will look at it, the composition of our retail book, our express credit is majorly into the those people who are earning salaries, and they are majorly state government, central government, public sector undertaking, or the defense forces. So long as they are getting their salaries, there is no stress. So SME, yes, of course. Some of the pockets wherever there are cash flow challenges, there is a tendency. But I would say that we have seen the trend that people normally try to repay that also. It may get delayed, but it gets paid off.
And so, in terms of your credit growth target for the year, this 3.5 trillion in pipeline, what will that entail in terms of overall credit growth? And
I have been maintaining 14 to 16% kind of a credit growth. I will stick to that number because we normally look at it in terms of the nominal growth of the economy, and we should be growing at a faster than the nominal growth of the economy.
But any pockets you can outline where you're seeing...
We will be growing everywhere. We will be growing in retail, SME, and also into agri. And when it comes to corporate, we are open for all kind of opportunities. Maybe renewable, maybe services, maybe infrastructure like road, construction. So, but it should meet our risk appetite.
Abhijit from Business Times.
You spoke about 3.5 trillion of corporate lending pipeline. How much of that was approved in the first quarter? That could be major.
Yeah, sure. I will just let you know. Just a second. Already sanctioned is already sanctioned and pending disbursement is 1.16 trillion.
How much was fresh was approved in the quarter one? That was my question.
ये बहुत तो number नहीं है.
That kind of breakup will not be there. Actually, it is a cumulative number which keeps going.
Approximately 27.
Dinesh from Indian Express. How was it?
Sorry?
How much was it from SME and
Which one?
of the total slippages? Sir?
Just one second.
2200 is SME.
Agri was 2,300.
What's the outlook on SME and slippages for the year?
SME we have actually pulled back 24%. So I think we should not have much of a challenge. It will not eventually not show up in the NPS. Only thing is SMA 0, 1, 2 is something we have to keep on following up. Efforts on ground goes up.
So sorry to interrupt, but on the coming to the CASA, you said that is inflation and then the interest rate cycle. That was now the signals are moving to the stability zone. So would that also reflect in your CASA or that would continue to?
No, actually, you know, our effort would be to improve the CASA with the current account component. Because when it comes to savings bank, these is the kind of product variants which are there. People normally sweep their balances. So that is something which is going to be a reality. As the economy develops, this is the kind of a tendency which will be seen. So our effort is to build up CASA through the current account route now.
Current 42 level, that should suffice.
Sorry?
42 current level that you have.
I think we should rather try to improve it.
Joel from Economic Times. Sir, your provisions have dropped year on year. And
Sorry?
your provisions have dropped year on year.
If at all we don't have NPA, you should be rather happy. If at all we don't have NPA, we don't have to provide. And the other piece is, the aging provisions are not there because we have already taken care of all.
Yes, sir. My question is actually that excluding AUCA, your provisions have also fallen. I was expecting that you would...
Because why should I provide?
Yeah.
You tell me, if my assets are performing, why should I provide?
Sure. So,
After all, I have to be accountable to my shareholders.
correct. So, is there any write back that you have done? That was my question.
No.
In this quarter or
Any write back? No.
counter-cyclical
Sir,
write
I will just explain it to him. See, when you have a fresh NPA, you have to provide less,
Less.
right? So, with, as sir mentioned rightly, we didn't have much of aging provision over this quarter.
Right.
So, since the fresh NPA need to provide less, in actual reality, it appears that we have provided less. But you have to also remember one thing, that when we recover from a loss account, we have to reverse 100% of the provision that we have already made. So if you add the dynamics, it will come to a number which has been displayed in the balance sheet.
And also in the last quarter, we made some specific provisions for some specific accounts.
Which
This
was
time we
March
have
Yeah.
previous quarter. And also some RBI.
See, I think if you see the trend, sir, if you permit,
Please.
industry-wise, as the legacy books get provided fully, you will see less and less PCR.
Right.
So PCRs will keep coming down overall. I mean, because AUCA has reached 100%, for example, right? So I think it's a general trend.
The second question is, I'm seeing a trend where quarter on quarter, if you see the slippages are increasing. You see versus December, March, now June. Is there something that is shifting? You mentioned that SME agri is where the fresh slippages are coming. Are you seeing any stress building up on except corporate, except retail, where because of which these slippages are the supply of
No, I mentioned, when it comes to what happens is that the trend which you have mentioned, the trend, this looks to be on the little higher side because I think we have got the trend also in this presentation. And if we look at that trend, this is actually, it looks little on the higher side. But the fact of the matter, if we compare with the previous quarter, yes, it is on the higher side. But if we compare a comparable quarter of the previous year, then it is on the lower side. It was actually much higher. From there it has come down to, if at all I'm not mistaken, it was somewhere around 9,700 odd crore in the first quarter of the previous year. From there it has come down to about 7,600 crores. So as I mentioned that whatever recoveries we are affecting in the month of July, it will actually get reflected in the September quarter. So to that extent, the subsequent quarters will have the impact of the recoveries of the previous quarter. Whereas in the first quarter, we don't have any such thing because whatever recoveries were affected, they were all accounted for as on 31st of March of the previous year. So that is the difference.
So, but if you see slide 39,
okay.
so in that slide it's a complete gradient starting from the Q1 to Q4.
Okay.
So in Q1 it was already higher. So Q1 that and Q1 this, the gradient is still maintains, and further gradient we expect in Q2, Q3, Q4.
So actually now if you really look at it, from that level 9,000 odd, it has come to 7,000. So now the base becomes 7,000 odd crores as compared to 9,000 previous year. So it will actually, our total balance sheet size will go up and this will further come down.
Thank you so much. Siddhi from Reuters.
Hi sir, I wanted to ask you about the pricing on your corporate loan. Some banks have told us that there is an issue in terms of pricing. So wanted to get your sense. Do you think
What is the issue? Can you please explain me?
that larger banks are underwriting these top level AAA rated loans at a much cheaper rate? Spreads between AAA and AA are falling.
I think even I hold the same view.
So is there a pricing issue?
No, if at all I would be going by what they are doing, then my NIM would not be at 3.47. And I'm very mindful that I must protect the NIM for the benefit of all the stakeholders.
So my next question was on the NIMs. Now that as deposits get repriced, any target on the NIMs?
No, dynamic.
NIM is always dynamic because yield on advances will keep on changing, and similarly cost of deposit will also keep on changing, cost of resources will keep on changing. But yes, of course, we are very mindful that we should try to have a decent NIM, which also means that we should not unnecessarily overprice our borrowers and we should not underpay our depositors.
The last question is, have you estimated how much of these ECL provisions would be required?
In fact, we had done some exercise and it is hardly anything. If at all I may say so, I think we had some last...
5,000 per-
Huh?
5,000 per
That
year.
figure is not there in public.
No,
those
that
numbers
is something, that number is negligible if I'll put it like
It's not
this.
going to impact our balance sheet.
For us it is not going to be of any material
We
impact.
have got
Usually we allow
non-NPA
NIM.
provisions to
Yeah,
be
please.
So in case of NIM, I think there are a lot of questions about NIM. We ought to understand the equation of NIM. So there are at least three variable parts of this, and all of these, except for the fact that you can increase your denominator, the other two parts are entirely a function of how the interest rate cycle moves, as well as how the customer behaves in terms of managing its finances. So if you can see the last year, within a couple of years, the AUM mutual fund itself has gone to more than 9 lakh crores, vis-a-vis what it was. So the customers, as and when the customers' maturity level in terms of financial literacy and management increases, there will always be a high level of dynamism in their allocation of funds. So if the interest rate cycle, it has moved up, there will be some time when it will stabilize and come down. So as per the cycle, the NIM also has a tendency to be sensitive. As far as the bank's costs are concerned, the quantity which we want to reach for lending, as well as the price which we are ready to pay, this leads to our cost of deposits. So that is why if you see some of the components interest rates of ours, whether it was savings bank or whether it was some of the buckets in the lower bucket and the bucket more than 3 years, we have made some tweaking entirely depending upon the need to balance our ALM as well as the necessity of funding. So these things are dynamic and hence the, say some kind of prediction about this particular need has a lot of other variables which we all will have to be cognizant of.
And also, as I mentioned in the last quarter of the previous year, we had one-off like the interest income on the income tax refund. So those one-offs also keep on coming, but it normally comes towards the end of the financial year only.
Piyush from Financial Express. Thank you for NSB. Sir, good afternoon. A couple of queries. Firstly, on branches, is there a branch expansion target for this year, or will be relying for BCs expanding that network?
See, we already have got 22,300 plus branches, and we are having BCs. In fact, we are embarking upon a multiple distribution strategy. It is not merely confining to branches, digital, BCs, and also wherever required, there is a need for branches. We are opening those branches also. We have a plan for opening about 200 plus branches, about 300 odd branches. But yes, of course, depending upon the potential which is available, we will be opening those branches.
Sir, on the digital side, you are acquiring a lot of savings bank customers through YoY. On the asset side, it's like 30-35% odd percentage. So, are we looking to invest more in digital to acquire more customers on the asset side as well? Is there any target for digital?
Actually, we are investing into analytics for acquiring more customers on the asset side through the digital mechanism. So that is something we have already started seeing the good result of that. Last year, in the first quarter, we had underwritten about 20,000 odd crores through the digital. This year, it is about 29,000 crores.